Ether has been under significant pressure since June 7, when it fell below its $3,800 support level. Despite a series of positive developments, its price remained below $3,600 as of June 19, showing no weekly change. Analysts attribute this bearish momentum primarily to a lack of institutional demand for cryptocurrencies and regulatory uncertainties within the Ethereum ecosystem. Noelle Acheson, author of the Crypto is Macro Now newsletter, expressed surprise at Ether's lack of positive momentum following consensus regulatory victory. She suggested that other regulatory issues related to staking might be deterring investor interest. On June 18, Consensus announced that the U.S. Securities and Exchange Commission (SEC) had concluded its investigation into whether Ethereum could be considered a security and the company's role in ETH sales. This investigation began in April after Consensus received a Wells notice regarding its MetaMask wallet potentially breaching securities laws. Ether's decline coincided with Bitcoin facing rejection near $72,000 on June 7, as investors grew concerned about the United States' fiscal health amidst high interest rates and deteriorating economic indicators such as rising wages and an increasing jobless rate. In May, U.S. average hourly earnings rose by 0.4% month-on-month, while the unemployment rate increased to 4.0% from 3.9% in April. Historically, investors tend to withdraw from risk assets like cryptocurrencies when the risk of recession becomes imminent. The U.S. 2-year Treasury yield fell from 4.94% on May 30 to 4.71%, indicating aggressive purchases of fixed-income instruments. Dan McCardell, co-founder of Case for Bitcoin, noted that while the long-term bullish trend for cryptocurrencies should continue if the macroeconomic environment remains stable, a macro shock or sharp correction in the S&P 500 would negatively impact them in the short to medium term. Thus, the current lack of interest in Ether may reflect investors' heightened concerns about a potential recession. Despite overwhelmingly positive regulatory news for Ether, including SEC Chair Gary Gensler's confirmation of the imminent launch of U.S. spot Ether exchange-traded funds (ETFs), Ethereum faces challenges such as persistently high network processing fees, which have exceeded $4 over the past week. Additionally, despite the growth of Layer 2 scaling solutions like Optimism, Base, Arbitrum, and ZK Sync, some decentralized application (dApp) volume has shifted to competitors like Solana, BNB Chain, and Thorchain. According to dApp Radar, while Ethereum remains the leader in dApp volumes over the last 30 days, competitors such as Solana, Aptos, Celo, and Phantom have significantly outpaced its growth. The number of active addresses interacting with dApps on the Ethereum network has dropped by 40% in 30 days, while Solana and Aptos saw increases of 58% and 115%,